Hello and welcome, everyone. Welcome to this latest weekly market recap. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and it is a pleasure to be with you again this week. A lot has changed. Of course, the big thing, we had the presidential election on Tuesday, and with that election, we saw Donald Trump win the election and regain the presidency in the White House. And as a result, we saw a lot of things today in the stock market that I really believe we need to pay a lot of attention to because the dynamics change. We see rotation in the market all the time. This is reason for some pretty key rotation. And really what we're seeing in terms of rotation is what we historically see this time of the year anyhow. So I want to go through and show you a little bit about what's happened maybe, last few months, even the last week, but also in particular what happened today and where we might be going from here. So let's first start off with one of my favorite chart lists, which is a chart list just showing you over the course. Well, I'm going to start off with a daily chart. Then I'll show you a weekly chart. Then I'm going to show you, or I don't know if I show you weekly, monthly. Anyway, we'll go through the charts and I'll point it out as we go through. But I want to show you that the same thing that happened today in the market has been happening for the most part over the last few months. So if you look at this list, and this is a list of the 11 sectors and the 6 major indices. So we're talking about the Dow Jones, the S&P 500, the Nasdaq 100, the S&P 400 mid cap, the S&P 600 small, actually the IWM, which is the Russell 2000, but it's similar to the S&P 600 small cap, and then also transportation. So all of those 6 in addition to the sectors. Well, take a look at what led today. So this is just for Wednesday. This is the first reaction after the presidential election. We saw financials have a huge day to the upside. The IWM small caps, huge day. Transportation stocks, huge day. Mid caps, industrials, energy, the Dow Jones Industrial Average. Those are all the key areas. Do you hear me talking about technology? No. Discretionary? No. Communication services, no, they were not among the leaders today. A lot went up, but not everything led the S&P 500. And if we look down at the bottom, we'll see that basically what didn't perform well today were defensive stocks. So this was all about the economy. This is all about the stock market looking at the economic policies, whether you agree or not. I mean, the election's over. I mean, now we got to deal with whatever is out there and whatever is happening in the financial markets. We need to recognize it and look to see where our best trades may lie as we move forward. So based on this very first day of trading, I think it's pretty clear that we've got transports, financials, industrials, small caps, mid caps. That's where we saw most of the strength today after the election results. And yet the defensive groups, which there were some maybe thinking that because some of the defensive areas have held up fairly well, that's not a good sign for the market. Well, that argument's out the window because they trailed by a wide margin these other areas that I mentioned. So this is just for today. But let me show you the exact same chart list, but here are the periods for 1 week. So now on a 1 week chart, look what's leading. Small caps, transports, energy, financials. We do throw discretionary in there. Mid caps, industrials, the Dow Jones Industrial Average, pretty much the exact same stocks, maybe in a little bit different order. If we go back a little bit further and we go back 3 months, now we've got discretionary up there along with technology, but financials are still up there, gaining 19% over the last 3 months. Russell 2000, the IWM, over 16%. Industrials are still there. There's the transportation average up 14%. So if we go back 3 months, clearly there's been some changes, but some of those keys, the financials, the small caps, the transports, mid caps, they've all been performing well pretty much over whatever time period you want to look at. So here I'm going to pull up the Dow Jones Industrial, and let's take a look not only at the charts, but I want to take you back and look at, this is a rate of change on the Dow going back 87 days. Now, you might say, why 87 days? I would ask that same question. Why are you going to pick 87 days? Well, 87 days takes us back to July 8th. And that was about 2 days before we got the June CPI report. And the market was starting to move up in some of those areas I was just mentioning, financials, small caps, mid caps, transportation stocks, all of these stocks started to move back right around July 8th or so. And so we saw that strength. We saw a pullback, but then we've been seeing more and more strength. And then today we had the explosion to the upside. This was the Dow Jones. This is the chart I'm looking at here on the Dow. So you can see July 8th, since then, we've gone up a lot. In fact, we've gone up 11.06%. This is the rate of change since July 8th. So this is what I want. One number I want you to focus on here. S&P 500. So same thing. Let's go down and take a look. Rate of change is only 6.5%. So the Dow's outperforming the S&P 500. How about the Nasdaq? This is the Nasdaq 100. This is what's been leading us throughout the secular bull market since 2013. Surely, this is an area where the market's going to be doing well, right? Last 87 days since July 8th, it's up 1.9%. It is almost flat. So here we were on July 8th, right here. Prior to today, we were down on the QQQ or the Nasdaq 100 from July 8th to yesterday's close. Today, we did make a breakout, and we did set an all-time high, by the way, on the Nasdaq 100, which matched the all-time high on the S&P 500. And we also saw one on the Dow Jones. And then when I show you the IWM and the mid caps, you're going to see the same thing. All-time highs everywhere. IWM was quite a ways away from its all-time high, but with a huge gap up this morning, we went right through it. But anyway, Nasdaq 100 since July 8th, going nowhere, up 1%, 1.9%. So let's take a look next at midcap. So this is the S&P 400 midcap index. How about 13.5% gain since July 8th? I'd say midcaps are outperforming the Nasdaq, outperforming the S&P 500, right? By a pretty good margin. How about the IWM? IWM up 18.5% since July 8th. Nasdaq 100 up 1.9%. That's nearly 17 percentage points of outperformance by the small caps. Listen, this is what I've been calling for. I called for it at the beginning of the year. I think it kind of got pushed back later in the year because interest rates didn't come down until later in the year. But since July 8th, since that June CPI report came out just a couple of days after July 8th, I think it was like July 11th. But since that report came out, this market is trading as though short-term rates are coming down. The inverted yield curve is going to uninvert. The 10-year Treasury yield continuing to move up, but this time it's not for inflation. It's for expected economic improvement. And so all these things are changing. The dollar is rotating up. Gold relative to the S&P rotating down. All these things are changing. And if you don't understand these changes taking place, you're going to be behind the eight ball as we go into year end and into next year. Now, I want to show you the seasonality side of this. So we've been talking about, the price action. Actually, I could go, before I get into seasonality, I don't want to get too far ahead of myself. Let's take a look at a few more of these. Let's take a look at the transports since July 8th. 14.29% higher. How about the XLF, financial sector ETF? 19.72%. XLI, industrials, 17.05%. How about technology? 0.38%. We're all really trained to think that the Mag 7 is always going to carry the market to the upside. Folks, there have been plenty of times when small caps outperform these stocks. And I've said that all along. If you look at the last 3 years, then sure, recency bias is going to make you think that small caps can't lead. But I would encourage you to go back to 2020 and 2021 because small caps blew large caps out of the water. And so I think we could be heading in that direction. In fact, we'll be talking more about it next week, but I'm going to have a free event a week from this Saturday. So we're talking about November 16th, probably start sometime mid to late morning on Eastern time zone. But I'll talk more about that and show you how you can register next week. So make sure you tune in. But I think this is so important that we need to discuss why small caps and mid caps are going to be outperforming, in my opinion, for a while. I said small caps could absolutely explode. once we got into a situation where the short-term rates were coming down, it was delayed a little bit, but you can see since July 8th how much the small caps are outperforming. I think they're just getting started. Anyway, now let's look at some of the seasonal stuff. So here's financials relative to the S&P 500. This is over the last 12 years. So this goes back to when the secular bull market started, at least when I think it started, 2013. And look at what financials do on a relative basis to the S&P 500 in the last 4 months of the year. This is normal stuff. Their best month is without a doubt November. So should we be shocked that financials exploded today? I mean, that's just normal history. That's the pattern. And the fact that now we're focusing more on the economy, the short-term rates are starting to come down, all of that is working together. And we've got like a tsunami of strength in that area right now. Moving on to the IWM, small caps. Over the last 12 years, did you know that the IWM has been up almost 100% of November's? It's only been down one time in the last 12 years. So we already knew the small caps coming into November have a seasonal tendency to move higher. So should we be surprised? No. History doesn't guarantee us anything, but it certainly gives us a lot of clues. How about transports? Transports relative to the S&P 500 over the last 16 years. I went back even, all the way back basically to the time when the financial crisis ended, or maybe when it just got started. 88, almost 90% of November's transports outperformed the S&P 500. So again, should we be shocked that transports looked like this today? And look at November. I mean, this is simply what transports do. We finally got that massive breakout. We've been seeing them trend higher for quite a while. We got a nice trend line dating all the way back really since the bottom on what? July 8th. I mean, it all kind of points back to that date as being the day when things started to change in the market. And now and Wall Street, by the way, you can see it on the charts. Wall Street was rotating. Whether or not we were, they don't care. They were rotating. They were getting ready for what we saw today. And I don't think it's going to change anytime soon. Sure, we'll have pullbacks and so forth, but I think next 3 to 4 months, I believe small caps outperform. All right, wanted to just go over to our homepage at EarningsBeats just to let you know if you want to sign up for our 30-day trial, you can do so here. We got your own little button there, start your 30-day no-cost trial. You will have to provide a credit card, but we will let you know before your 30 days expire. We don't want you getting charged if you don't want to be part of our service. Also down here, you can see there's an area where you can subscribe to a free newsletter that we have. Name and an email address, all you need there. Monday and Wednesday is when we send it out. I do want to show you our historical performance because one of the parts of our service, we do these portfolios. The model portfolio, we started it on November 19th, 2018, in the middle of the trade war, if you remember. Since that time, our model portfolio is up 243%. The S&P over the exact same period is up 120%. We have more than doubled the S&P 500 over a 6-year period. There aren't too many folks that can say they've done that. And we've got all the recordings, all of our webinars and so forth to prove exactly what we've done. This quarter, look at this quarter. Because of the strength in the areas that we were fond of going into this quarter, small caps, mid caps, and so forth, we've got our model portfolio now. It's up 17% this quarter. S&P 500 is up 5.7%. Look at our aggressive portfolio now up 20% almost versus 5%. These are huge levels of outperformance. And we've got our next portfolio draft. Every 90 days, we switch them out. The next one comes up on November 19th. So guess what? Your 30-day free trial gets you into that as well. So check that out. But this is now the time with everything rotating. You need to be on top of this. At least be considering where you might make some tweaks and some changes to your investment strategies. If you are on your mobile device, by the way, we do have a slide up right now where you can scan that QR code, and on your mobile device, that will take you to a landing page where you can sign up for our free newsletter. We're going to be reaching out in a number of different ways for this free event that we have next Saturday. One of those ways, guarantee, we're going to be letting our EB Digest members know multiple times between now and next Saturday. We want you to be there to check this out. It is not going to cost you a dime. It is going to be a free event. We don't do the free ones very often, but we do want to reach out to our community to let you know. All right, to wrap up today, what I wanted to do is I wanted to go through a couple of charts, take a look at maybe some possibilities as far as maybe some ETFs that you might be interested in and so forth. And maybe if we have some time, I'll run through those Mag 7 stocks today, but they did not perform well as a group relative. I mean, we saw Tesla do well today. That was awesome. But we also saw Apple down today. Apple was down on a day when the Dow Jones went up 1,500 points. Kind of just what I was talking about earlier, just not exactly, a great market for the technology area, for the Nasdaq 100, not nearly as strong as the small caps. All right, so chart I have on your screen right now is the small cap relative to the S&P 500, and this goes back since the end of 2017. So we're going back 7 years. This is where I was talking about the small caps in 2020 and 2021 absolutely exploding relative to the S&P 500, relative to the Nasdaq. We saw a massive outperformance, and our portfolios were soaring on this move back to the upside. Now, the last 3 or 4 years have been more challenging, especially for our aggressive portfolio, because we trade a lot of small caps, or not trade, but we invest in those portfolios every 90 days. We do invest in a lot more small and mid cap stocks. So it's going to be really hard to perform well in an aggressive portfolio that has small and mid cap stocks when the small cap stocks look like this on a relative basis to the S&P 500. Now, some of you might say, well, yeah, it's still downtrending. Why would you want to get in now? Well, like I said, we've been seeing some rotation. Look at the bottom here in 2024. Where did it occur? Looks to me like right about July 8th, which was just about the time we got that CPI report, which is when the market started believing that interest rates were coming, and when Wall Street started rotating into the small and mid-cap stocks. Now, I think we're going to get our confirmation when this IWM-SPY ratio breaks this pattern of lower lows and lower highs, and that's going to come when we get through that late July high. I believe we're going to go through it. I mean, some of you might want to wait for the confirmation. That's fine. This is something that you should be thinking about, though, for sure. So I believe that the move today and the huge relative strength in small caps today, I feel like that is just a continuation of what we saw back in July initially. And as things came back down, I think Wall Street's positioning into these areas, and I believe we're going to see it come to light, if you will, as we see this relative breakout occur. And I wouldn't be surprised to see it occur very soon, much sooner rather than much later. So remember, I showed you all those seasonality charts. Small caps love November. Transports love November. Financials, industrials love November. And they also happen to be the areas of the market that exploded the most as a result of the Trump victory in the election. So I think this is something that is seriously just kind of getting started. I don't think it's ending. And you have to do what you will with that information. But again, I'll go over more of that when we get to next Saturday and we do that event. So I'm going to show you 2 ETFs that I think are kind of interesting right now. One is the Small Cap Momentum ETF, which was up 7.26% today. So it outperformed the IWM. These are stocks that generally have better momentum within the small cap space. And so if small caps go up, it kind of makes sense that stocks in that area that have some positive momentum may actually outperform. At least that's my way of thinking. Agree with me or not, that's up to you. Also, the XMMO is the ETF that does the same thing, but this time for the mid-cap stocks. And look at this one jumping 4.5%, actually outperforming the S&P 400 mid-cap index today. So those are a couple things I wanted to point out. I do want to go back to this chart showing this 87-day rate of change because I want to show you these stocks. Apple, let's take a look. 87 day rate of change, minus 1.49%. This move to the upside, this isn't being led by Apple. Apple's not even participating right now. How about Microsoft over the same period? Microsoft down almost 10%. If somebody told you 4 months ago that small caps were going to outperform Microsoft by 28 percentage points or 29 percentage points, you probably would have thought they were off their rocker. It just happened. How about NVIDIA? NVIDIA actually looks pretty good on the chart, breaking out again today. But NVIDIA up 15.7%. Even NVIDIA breaking out is still trailing the small caps. How about Meta? Meta did not have a good day today. I don't know. And it's only been up 6% since July 8th. How about Amazon? Amazon up 3.5%. Google down 7.25%. Tesla up 14.7%. So that one, along with NVIDIA, still seems to be doing pretty well. Netflix, I'll throw you a couple more out there. Netflix up 12, 13%. Netflix looks pretty good, broke out again today. So that's not bad. Costco's kind of been consolidating, but over the last 87 days since July 8th, only up 1.8%. Anyhow, as far as I'm concerned, this market is shifting. It's rotating until it gives us some signal of rotating back. I think you got to be prepared to readjust your strategy as we go forward into year end and into 2025. That's my take anyway. So as I wrap up today, there's another slide on your screen. You can, again, use your mobile device, scan that QR code. That will take you to a page that lets you know how you can follow us, how you can follow me, how you can follow us at EarningsBeats. We do it lost in all of this today because of the huge move, the election, and everything else. Oh, by the way, there's a Fed meeting going on. It started this morning, and tomorrow, Thursday, this is kind of an unusual week because usually it's Wednesday afternoon, but they pushed the meeting back a day because of the election. And Thursday at 2 p.m., we get the latest on what the Fed's going to do. I think we're going to get another quarter point drop in the short-term rate, Fed funds rate. And with the 10-year Treasury yield going this way and the short-term rates going down, I believe it's setting up for an uninversion of the yield curve. And except this time it has to do with a strengthening economy, not with inflation. And so I think we're looking at this soft landing and higher prices. Just my opinion. Have a great week, everybody. I'll see you next Thursday. Happy trading.